City took the team.
All right, ladies and gentlemen, welcome back. We got a very special Valentine's Day chart talk coming at you. Spending it with the love of my life, Benagram over here. Couldn't be happier to spend it with you. But without further ado, we got a crazy market on our hands. Let's get right into the market outlook. So, stock's been under pressure, flat out. We saw the market top in November, and we got a slight semblance of a bounce the last couple weeks, and it was more of an oversold bounce. And we can look at this long-term trend line in the SPY, the S&P 500 right here. We broke that trend line to the downside. We came up, we retested the area, and now previous support became resistance, and that's the area we ended up selling off from. So, I mean, the trend is still down. Stocks are under pressure. And now we're getting the headline theatrics with all the Russia-Ukraine stuff going on. Today we heard some wild news where stocks started viciously selling off midday after we bounced because the Ukrainian president alluded to an attack coming from Russia. Stocks viciously sell off for an hour or so, and then the president comes out and says, "Oh, I was just kidding," and stocks get bought back up. So that's the type of environment we're in, where everything's so touchy, everyone's a little nervous, quick to hit the bid, quick to sell. So high cash levels are definitely recommended in my point of view. Very difficult environment, very random. Something we saw today that makes even research on the weekend so difficult is we saw the U.S. we saw oil and we saw energy stocks ripping Friday on the back of the Ukraine-Russia news. If Russia wants to threaten the oil market and cut off supply to some areas and things like that, supply goes down, demand goes up, oil prices are just going to continue to rise. So coming into the week, I was bullish on energy and oil names, and then what do we see this morning? Energy and oil names are the weakest sector, and then tech stocks, which were the weakest Friday, become the strongest sector. So that's the type of randomness we're kind of seeing in this market. Makes it very difficult to have any high conviction on anything longer than a few days right now. So definitely foot off the gas pedal. Definitely more of a research mode. What are you thinking over there, Bennett?
So just a couple individual sectors I'll run through. And this is, again, more on a longer-term standpoint, not kind of day-to-day kind of swing trading. Yeah. So you mentioned, like, energy was weak today, which, with you 100%. And just on the overall trend it's been in, it's very extended off its, major supports. But broadly speaking, it's still in this, pretty strong uptrend and moving its way higher. So in the long term, it's like energy seems like a good place to be. In the short term, probably not the best. We saw the same kind of with utilities. In time, this utilities through their all-time highs. This 156 area looks very strong, but for now, again, it's pulling the support. Pretty weak. We saw the REITs, same thing. Coming near support, but another sector that's still looking pretty strong, relatively speaking. And financials, another sector that, again, just flagging near all-time highs. Again, this little bit of a pullback in this range. 10% range has been trading in. But these are still three sectors that have been pretty strong lately compared to some of the other ones. While on the flip side, sectors like the industrials have been a little bit weak lately and looking as if they're starting to kind of H over and they're going to want to test those prior lows that we saw a few weeks ago. We kind of saw the SPY, again, same thing, kind of pulling into that lower end of the range. And for now, 420 is the key level of support, but we don't really want to expect that to be this hard line in the sand that, like, if it comes down there this week or next week, it's going to hold it perfectly. You kind of have to expect to shake out in that area. And one of, I think, the biggest clues among all the sectors really is the telecom sector, which is probably one of the weakest sectors right now. But we saw this kind of head and shoulders pattern forming in, kind of June to November. We saw that consolidation period. We saw kind of the two shoulders and the head forming, and then we saw it roll over and break down, and now which is clearly a big avoid. And we're starting to kind of see this similar pattern setting up in some of the other sectors, where even in the broad markets, we can kind of see a little bit of that left shoulder, and you can kind of call the head, right, that for the November to January kind of area, and then right now could potentially be that left shoulder or that the right shoulder, but that's where it's, again, we don't want to say, okay, down to 420 the market's going to drop dramatically, but the telecom sector is giving us a little bit of some clues here that it had that big run up, it had that consolidation period near highs, which either is going to be a consolidation period to break out higher, or it's a topping pattern that breaks down lower, and telecom is kind of showing us what happened with them, and we're starting to see kind of some similarities in some other sectors. So, like you said, it's kind of research mode. It's kind of hands off, and just be patient and waiting for the easier trading setups to present themselves.
Yeah, absolutely.
All right, so with that, Sheik, you want to get into some top ideas?
Yeah, for sure. And I mean, the broad market is still in some pain, but there are some charts out there that are still looking pretty decent. I really like this BMRN, BMRN. Just coming out of this long-term base. The only problem is they have earnings coming up February 23rd. But so we saw them break this resistance area through this 90 with some velocity, some strength. And now it's kind of backing into that retest area and showing it wants to show some buyers in that area. This is not a name that's going to be very connected to the broad market, which I love. So I have a tiny piece from this 90 area. If we see a pivot form and it breaks the upside through that 91, I'll add some stock with a very tight stop under today's lows. And some of these oil names are getting that love again, like this LPI. It's still looking pretty good. It's which the tough part is how serious do we take this Ukraine-Russia news, and that's just kind of what's tough about trading commodities is they're so news driven. This MTDR, Matador, this is another energy company, oil and gas production. So this one's looking good. HFC is another oil name. This one is a really nice base. I'd love to see this flag out a bit before their earnings, and give us a move through that 39 area. And then on the flip side, talk about some short setting up. Look at this Caterpillar, and it goes right hand in hand with those industrials being weak. We type up the XLI, the industrial sector. Looks like it's a topping pattern. Looks like they're going to break down at some point. So this cat, it's just forming this bear flag over here. Not a huge setup on the daily yet, but on a longer term chart, you can see that it's just struggling to keep bouncing off the support area. So, 197, 196 area, that's where I'm going to look to really focus on that name. Another one pointed out, Mike pointed this one out in the chat today as well, WELL. This one looks like it's topped. Oh no, they have earnings? Oh, damn. All right, so they got earnings tomorrow, so that becomes a no trade. But this is the kind of pattern that we're looking for in a breakdown. Very topping pattern, failed bull flag, failed to break out on the upside, and now it's just flagging to the downside right at support. And if the market's weak, it's not going to hold that area. Another one is this CrowdStrike, CRWD. We had a nice trade in this one on the way up, but it's struggling to hold those gains really, and now this to me is just looking like the next bear flag. So I'd like to short this one down through that 178.50 pivot. I think the shorts are unfortunately going to be much more actionable than the long setups. So got to be prepared both sides in this market. So I think this CrowdStrike to the downside could be a good one. What are you looking at over there?
So I have three main ones. Again, more like weekly chart pattern that are developing that are probably not going to be going, tomorrow or the next day, but want to keep on the radar. First one is this LMT up through this 400. This has been, pretty much a resistance level going back to kind of, the pandemic, going back to 2020. And this is the, fifth or sixth kind of major time it's getting up here. And it's just getting very tight. The goal will be looking to buy up through 400 versus 380 for now. So that's one I'm keeping on the radar. We talked about.
Okay, I do a quick comment. Mm-hmm. Quick comment on the LMT, which is what makes this market so difficult. LMT, strongest name on the board Friday. We come in today. Russia, Ukraine is de-escalated, or so we get the news on that, and then it just sells off all day, down 2%. Mm-hmm. So I mean that's just kind of the randomness we're seeing in this market. We're not seeing any strength stick, which is making everything much more difficult. But you got it. You go on.
Yeah. Next one is this WSFS. We mentioned before, financial names, financial sector has still been pretty strong. For now, it seems to be seeing a very nice bull flag forming near all-time highs, and this WSFC is going along right with that. The bull flag entry or the blue sky breakout be through this 56 area. Again, you have to just be aware that prior all-time high is like 57, so it's it's not a perfect blue sky breakout, but it's still setting up nicely nonetheless. For now, it'll be reverse 50. This probably will need some time to set up. And then lastly is this MU. Same thing, will probably take some time, but up through this 98. We saw the all-time high get formed back in March. We saw it retest it perfectly in the beginning of this year, and it pulled back in and it's starting to work its way back up there. But the key thing is we're seeing these higher pivot lows. So the last time when it ramped to 96, it dropped all the way down as low as 60. This time around, when it got back up there, basically to 100, it pulled back to about 75, 76. So those buyers are stepping up, and we're starting to see, as this pattern continues to develop, resistance is at 98, and we're seeing these buyers kind of move up and get more impatient. For us as swing traders, we can find that entry through 98 a much tighter risk than the person buying it that first time or the person buying it that second time. So those are the three major charts I'm keeping on from more of a longer term standpoint than a shorter term swing.
Oh, very nice, very nice. You want to get into good trade, bad trade?
Yeah. So.
All right. So I'll give a little story of my couple weeks ago. I haven't really done much. I didn't really do much after Monday last week, and I'll explain what happened. So I was long this LPI. I was building a position in it in this area when it has all these consolidation days towards the end of January, so I began buying the oil names, or oil and gas names, as they started to get some strength back again. So I was long that name that day, and I was also long this MTDR, and I was long the breakout day on the failed breakout. So that day was, if we look in the S&P, the SPY, let me get the dates correct, that was February 4th. So if we look at the SPY, February 4th, it makes this low. It's not a huge move off lows, but I'm day trading at this point. I have an amazing entry in the SPY. I buy a full position, $1 off lows, just kind of spot the lows, spot the trap short there. So I bought this like $1 off lows. So lows are 444. My price was 445. Dollar risk, massive position. And I'm a little nervous about the market. Uh-oh, we got some dogs in the background. Hey! All right. So I have a massive position on, and I also have LPI and MTDR. So I'm maxed out, leverage long. I'm thinking, there's very few spots to pick there's not many spots to, make your money in this market, and especially if you're going all one way. So I was maxed out long, leverage down, things like that. So I have the SPY trade on, and I have such a great entry, and I rush, and I almost panic out of stock when I sell it for $2. I have $1 risk, I sell it for $2. I'm like, okay, cool, 2-to-1 trade. The reason I did that was because I have already so much long exposure in this LPI and this MTDR, so I didn't want, if the market's gonna pivot and bounce, my longs should benefit anyway. The mistake I made was, you're trading commodities, they're a whole different ball game. They're not as tied to the S&P as, most stocks generally are. So I rushed out of my good long in the SPY, and then what happens to LPI and MTDR, this one, it fails to hold on to the gains. I get out of this one for a loss a couple days later. MTDR, failed breakout, same thing. So, and then, I had such a vicious P&L swing. That was on a Friday. I come in Monday, trading a bit on tilt. This is the mistake that told me to put my foot off the gas. And I just got super long this Tesla right off the open. It triggered the area we were looking for to trigger, 937 to the 940 area on super high volume, and then it just faded the whole move. So I had too big of a position in all of those trades, and it made me handle them very poorly. And the P&L swing was huge. So I was in my head a little bit about my executions, what I should have done, what I shouldn't have done. So since I made those like 4 mistakes, I feel back to back. I haven't really traded since. I need to wait for, until I have really high conviction in a trade to, really put some size on back anything. I think the market's very random right now, which is making everything very difficult. So, I just have my foot off the gas. I'm back to, mostly cash, probably 90-95% cash at this point. So, my foot's off the gas. I was doing really well up until the beginning of February, handling the market very well, trading the back and forth, going long, going short. And then I compounded these mistakes, trying to make my money in a very short time because I feel, the market's very difficult. You're not going to have many shots. So I took a few big shots back to back. They did not work out. So that's telling me it's time to take my foot off the gas till I have that conviction again. So, took a few hits, took a few red days. It's all right. We'll be back. I got to wait for my setups to come back. They always come back. It might not be for, a few weeks or so, but right now I'm just playing the waiting game after, I made those mistakes. So, market's handing out endless lessons. I got a nice little lesson. What are you trading over there?
So the only thing I've really done recently, I took a trade in this X-ray up through this 54 area, and this was really just a break-even trade for me. I was keeping on this 54 area, had a buy stop in, and got triggered in. This was on the 9th, so this was kind of, I guess it was Tuesday last week. A little bit of follow through, kind of dollar in my favor, and started to kind of flag out, but again, nothing really there to give this name. I'm not going to give this name versus 51 when it goes a dollar in my favor. So after those kind of 2 or 3 days where we're just kind of messing around, I moved the stop to that prior low a day, and basically got it stopped out for, it was like a 10-cent loss, 53.89 stop. So I didn't lose much on that. But I think sometimes, even for right now, it's good to kind of look back at some of your old trades if you haven't been that active, to just see where those names are. And the last few trades that I put on, this was, I guess, kind of the end of January. There were a few kind of support buybacks that I put trades on, and they all failed within the next day. And looking at them now, and in the moment, it was a little frustrating. Like, I put on 4 trades, all 4 fail. I feel like an idiot in the moment. But then you fast forward, a few weeks later, and we look at, Zebra. I bought up through 520 for like a sneaky buyback. Here we can see, this level that was resistance, and we saw these entries back up through that area. I tried it didn't work. Very tiny loss, and we look at it today, almost 100 points lower than where I was getting in. So did I feel stupid losing 10 points in Zebra day 2? In the moment I did, but now it seems like the best trade to have taken that tiny 1% loss that now would have been, a 20% loss. Same with this PWR. This was looking to buy up versus support. Again, same thing. Didn't really go anywhere in my favor. Lost 2-3%. Traded a little bit lower, and even now it's still not even above that prior price. So not as bad as Zebra, but still glad that I haven't dealt with the all this pain in this name. MMC was a swing that I was in for almost a year, probably 8 or 9 months. Very easy swing, just kind of continue to grind higher. And this goes along with kind of like the Telcom, where up here, it looks like an amazing bull flag. It's at all-time highs, and it looks great to continue to hold. And it's funny, I was actually potentially looking to buy up through this 175 if it got up to that third time. But knowing that when I bought this name at 120 and now it's up 40% of my cost basis, and now I'm trying to find the next entry, for me that's sometimes the red flag of when I need to start being much more defensive with the name, when it looks like the perfect entry through all-time highs. And now this, what was a bull flag, was more the topping pattern, and now it's breaking down lower, and it was much easier for me just to take that exit, take the profit down through 160, and now I'm kind of just done with the name, and I can let it kind of pull back to wherever it has to be. And again, lastly, this Ulta, same thing. Am I glad that I took that loss that day? 100%. It's barely went above my average cost basis in the last month. So those 4 trades, 4 trades that failed, except for MMC, which was a longer term swing. But in the moment, I felt stupid. Now, after the fact, very happy that I took those tiny losses in the moment, then sticking with them and hoping they were going to turn around, which none of them have, so far. So those were my little lessons for the past few weeks or so.
That Ulta kind of looks like a nice little short candidate. It's struggling to get reclaim back this 200-day simple moving average. Mm-hmm. This one fails. I'll short this one. Shit. Yeah. 357. All right. Good to know. Thanks. I appreciate that.
I gotcha. All right. So with that, Jake, you want to get a book of the week?
Yeah. So I'm still reading this book. It's called Noise: Living and Trading Electronic Finance. I just got to the part where it's kind of talking about the history of the market and how, and it's a book pretty much that talks about the different sects, S-E-C-T-S, sects of the market, different communities that form between retail, institutional, and it suggests that, it's not a split, black and white between institution and retail, is that there are many, many little micro sects in the market. So right now it's just kind of talking about the ease of access to the market and how in the 80s it was revolutionary that if you wanted to buy a stock, you call your broker and it's like, buy GE 100 shares, and you press 1. And you get the execution handled in 20 minutes, and then that was very fast, and that was revolutionary. And then in the 90s, the brokers became much more accessible. Then early 2000s, we got electronic trading, and all it talks about how the ease of trading has become so much more accessible. And what that does is suck so much more retail money into the market. And the statistics show that only about 2% of retail traders make big money. It's very interesting, and it also suggests that maybe they're not trading to make money. Everyone's trading to make money, right? But subconsciously, they want to win in the market. They want to feel good about themselves, and there are all these other subtle feelings and nuances that happen to these traders that cause them to keep coming back no matter how much they lose. So it's just very interesting reading about how, it's like the market participants would be similar to like, the countries in the world and how there's the big countries and small countries and things like that. And it's just very interesting to see that perspective thrown around. So I'll dive a little more into this one. I'll get you some more intel next week. But I definitely like this one. Definitely one like I've never read before. It breaks down some different points. So I'm a big fan of this one so far. It's definitely a more difficult read. It's a little sophisticated. That's not really our style, but it's good. It's good. I recommend this one.
Yeah.
What you reading?
I mean, even on that point, it's even like the percentage moves that we're seeing today in very popular names, they're happening much faster than they were in the past. And exactly to those points where you think of like, these names that can go up 1,000% in a year, 2 years, 3, 4 years. That was something that, in those eras in the 60s, 70s, 80s, even up to 2000s, those took, decades to get those types of returns, where now we're seeing them much more compressed because, like you said, it's the ease of trading. It doesn't cost anything to get in, and people just want to be in for the story more so than the profit.
Right. And, we look at what happened with GameStop and AMC last year, and I have a confession. I am addicted to these like AMC Twitter threads where it's at $17 right now. They're calling like $1,000 end of the year. And it's just like they're constantly losing. But now it's like they've taken it. It's like their battle cry. It has nothing to do with making money or anything at this point. It's about sticking it to the man. It's just like it's so wild to me how there are so many people still out there every day typing up AMC, and it's like oh god. I'm sorry. I'm addicted to it. It's like AMC was up 18% last week. Crickets from the mainstream media, and it's like what? Like what? But yeah, and that's just like the perfect social experiment to me that my book's describing really well. It's just like these people are holding on. It's not about making money. It's about being right and being on a team almost.
Yeah, it's like it's like the hurting, and also if they were to sell it or lose or have to realize a loss, it's admitting that their idea was wrong, and that's far more painful than the monetary gain or loss that they can make. It's like having to admit that this was a stupid mistake. That's like, then you have to really double down and no, it's going to work. It's going to do this. And then you kind of, you're off into another dimension. But on my end, a book that again, it's Trade Like a Stock Market Wizard by Mark Minervini. This was a guy that we've always, the guy's a master in the market, but for us business wise, we don't want to talk about competitors for our own business. So this was even a guy like I never read his books because it was just like it's reading our competition. But it's funny when I read this book, a lot of the things that we trade and focus on
the parallels
are like it's almost as if we like, I don't want to say we copy the book, but it's like a lot of things are very similar. We both use sell stops. We focus on the leaders. We focus on buying the names that look the most expensive. He does a great example of just saying how like, when you perceive the expensive stock that it can't go any higher, and those are the ones that do, and the ones that are cheaper tend to get cheaper. And again, very similar outlooks, on the market. And he tends to gravitate a lot more towards the smaller caps and less popular names for those bigger percentage swings, where we kind of focus more on the developed names and won't have those crazy percentage returns, but we can define our risk much more consistently. But again, very similar outlooks on the way he trades, very similar with how we trade. So yeah, that was that. I do have one funny quick story.
Okay.
That so last week I got a text from the homeowner that we rented the house from in Vermont, and he texted me a picture of like the tray from the like in your refrigerator, those like plastic / glass like trays where you put like the milk and whatever.
Of course.
So he sends me a picture, and it looks to me initially that it is like scratched, but no words. Just sends me the picture of this tray with what it looks to me is a scratch on it, and I just relax. I'm like, what's going on? Like, I don't know what the issue is here. I'm thinking that it's damage, and he's trying to bang me out for some type of security deposit, which you and I both know that he's not going to really replace the tray. He's just going to put it back in and collect his money. Right. But he replies with like this like, using this phrase like, if you're going to do George Bush in my house, like clean it up. And I'm like, what are you talking?
You said George Bush?
Yeah, which immediately I feel like you already know what he's referring to. But to me, it goes right over my head. So I'm like, let me just call this guy. I don't know what the fuck's going on. So
George Bush. That's hilarious.
Yeah. So I call him.
I never heard that one.
So, but I could tell you. I feel like you're picking up where I'm going with this. So I call him.
Yeah.
And I'm like, hey, Jerry, what's going on? Like, I honestly don't understand the picture, and I honestly don't understand what you're texting me. And he's like, if you're gonna do coke in my house, clean it up. And I'm like, what are you talking about? I'm like, first off, we haven't been in your house for 3 weeks. So I'm like, do you know you're texting me? Like, are you thinking I'm a different renter, like from that was just there? He's like, no, you guys like the Wolf of Wall Street. I saw I see your videos and that. And I'm like, listen, man, like I've never done that in my life. I don't really hang with people that do that either. It wasn't that week. Like our weekend wasn't that type of weekend. Like we were hanging out, there was couples there. That wasn't the vibe of the weekend. Like I just really don't think that was us. I'm like, I'll make a couple phone calls and get to the bottom of it. And I'll tell you, like I have nothing. If they did it, I would say it was us, but I really don't think it was us. So I hang up. I make a couple phone calls. Everyone's like, no, dude, what are you talking about? Like, so no one was even like fake lying, like, oh man, it was me. It was like flat out, it wasn't us. Like, call the guy back, and I'm like, listen, man, it's been a couple weeks. Is there any chance that anyone else has been in the house since us? Because we left the house immaculate. We put all the garbage we wanted. We cleaned everything up. Like, that's not something we would have missed, especially something like that. And he goes, there was this group of baristas in recently. And then like he starts to figure it out, like in his own head. He's like, they did leave the house a mess. And he's like, did you guys leave like a bunch of beers outside? And I'm like, no, we didn't. I'm like, we brought a keg. We left with the keg. We didn't bring it. We didn't have any beer bottles. He's like, yeah, they had like 20, 30 packs like all over the place. So I was like, all right, I get you can initially try to blame us because we're, Wall Street and that drug kind of goes hand in hand. But
yeah,
we left it spotless. And then you have this next crew that comes in and leaves the house a mess. That's probably your crew. And he's like, I'm really sorry. I kind of jumped to conclusions, just assumed it was you guys. And like he flips like apologizes. I'm like, it's fine. But I think it's just funny that this is probably the only time that the Wall Street crew gets like their finger pointed at for the drug issue, and then it's not us. And it's like the guys that worked at Starbucks was the crew that did it.
It's so funny.
So it was just a funny little like text exchange that.
Party animals.
Yeah.
Yeah.
No, it wasn't us, man. Sorry. But just a little story.
Just a little tidbit.
Yeah.
You crazy kids of Vermont. I still think it was you guys. With that, we are out of here, folks. We'll see you next week.